How to tell the market is in euphoria stage. Sir John Templeton once said, bull markets are born on pessimism, grown on skepticism, matured on optimism, and die on euphoria. We will do a case study on the Japanese stock market, how to identify a euphoria run-up. Before 28 February crisis, we saw a run-up, and within this run-up, we saw two distinct euphoria characteristic. Number one is regular overnight gaps, and number two, huge net change at its opening. My name is Con Hao. I enjoy studying how different markets currently behave to uncover emerging trends, the potential trending markets of tomorrow. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. When I have identified that the market is in its euphoria stage, I will have to stay cautious. However, on top of these two euphoria characteristics, whenever there's a divergence, in this case, I saw a divergence between its fundamental and technical, I will have to stay even more vigilant. And I have shared this tutorial in June last year. So let me just open this up. Then I believe that if it break this consolidation, it should trend either way. And let's see the outcome. So after this consolidation, it has broken above and it trend much higher. So my study was this. If it broke and start trending higher for a healthy and sustainable bull market, ideally inflation and interest rate should stay low. But we all read that the Japanese inflation continued to climb to its recent high, and its interest rates or borrowing costs also broke record level. And its different tenure was seeing here the 2, 5, 10, and 30 years yield. And let's look at the 30 years yield, and this 2007, it current level at 3.62% is way higher than those in the 2007 financial crisis. And let's look at the Japanese stock market here in its bull market at the moment, but I think you have transited from a bull to a bear market. But for a healthy bull market, for its continuous growth, its bond market should also remain on uptrend. But what we're seeing here, it has lose its momentum. So we saw that the buying interest has broken below this crucial point, the crucial up point in 2024, and currently still staying at a very low level. This also represents that investors are not subscribing to the Japanese government bonds, or in short, it's called the JGB, as much as before. With a rising yield or interest rate and a downward pressure on the JGB, yet an uptrend on the stock market, this is where I'm seeing a divergence between its stock market and its fundamental. So, how to time this? Again, whenever there's a divergence, I first stay cautious, but I may still hold onto my long position. However, if I'm going to layer this divergent analysis with this euphoria characteristic, with gaps and huge overnight gaps or huge overnight net change, so I would be making preparation for the trigger. The trigger is this is transition from a bull to a bear market. Is when this uptrend support line that we saw, we're seeing here, that is being broken below. Let's look at the weekly chart here, and we could see that the uptrend started in April 2025 and is so nicely on this uptrend. And the war started. We saw a divergence. We saw the euphoric characteristic that we discussed about. The trigger is when it has broken below, and now it's doing this pull up here. So I'm expecting market to do this in time to come. I believe that with the divergence and the two characteristic of the euphoria plus the breakdown of this uptrend line, the market have to me is a trigger, or you can call it confirmation, that the bull has transit to a bear market. So this is what I mean here. Currently, I'm staying clear from my long position and moving into shorts right now. And let me just fine tune a little bit here. And I'm going to go into the daily chart and I'm going to remove this dotted line here. So what's my plan here? So in the past was I buy on dips, but now moving forward, I'm planning to do this. And of course, we know about what happened here, that the US and Israel has this ceasefire agreement for 2 weeks. So the market has rallied, but I'm seeing that it is an opportunity to get out of the long position or perhaps to get into short position as well. So what I intend to do here is that I think it's still developing here. And what I'm going to do is I'm going to plot this line. We got to keep adjusting from time to time. And I'm going to do this here is I'm going to do a parallel line below. I'm going to clone this. And can you see that on taking reference on a peak? And I just have to make reference on a peak to see if this downtrend line, if I'm drawing this correctly, and making reference on the bottom, I'm seeing that it fit nicely. Now, this is a guideline. I'm not suggesting that it will move that way, but along the timeline, we have to make adjustments. So basically, the whole mode is what we've discussed is after this day and after when it broke this below this trend line, my mode is to hold less of the long position on the bull market or any bull market. But on the trading aspect, I may be getting into short position, sell into strength. Or maybe for as an investor perspective, I have no interest in holding any long position moving forward. In my opinion, a run up like this with regular gaps and with regular opening price that is at least 2% from its last trading day close, it is telling me that the market then was in its euphoria stage. Try calculating the specific opening price of up 2 to 5% in its absolute numbers on whatever stock index they are interested in. You will see how euphoric that is. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that I stayed through this tutorial. You have many great trading weeks ahead.